I'm Jay Taylor. I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. I'm also the host of a radio show called Turning Hard Times into Good Times. It airs every Tuesday on the Voice America Business Channel, and you can listen to it the following day by going to jtaylormedia.com. I'm here at the Metals Investor Forum in Vancouver. It's January 18th, 2019, and I'm really pleased to be with Amir Adnani. He is the CEO of Uranium Energy Corp. Amir, thanks for joining me again.
Great to be with you, Jay.
I've been following your story since the day you went public,
right.
Many years ago.
2006.
It's been a long time. Yes, I think the uranium industry has had a tough time of it, but obviously it seems as though the supply and demand situation is really firming up for producers of uranium. Talk to us just briefly about the supply and demand for uranium, and then let our viewers know how you're set to start becoming one of the premier producers of uranium in the United States.
And I'm not sure if we're sort of making this and talking about this for someone that might be very familiar with uranium or not at all. But in a way, just to draw maybe a comparison, I feel like in the 14 years that I've been doing this now, building uranium energy, there sort of is this period that you would refer to as kind of the pre-Fukushima period.
Yes.
Sort of almost like in historical reference, this would be your before Christianity, BC kind of thing.
Right.
And then there's the post-Fukushima environment. And it's kind of interesting to look at it that way, because I think if you were a company that was active in uranium pre-Fukushima, which is the nuclear incident in Japan that sort of changed the course of what we were all doing, your strategy would have been very different pre-Fukushima. Your strategy would have been about speed to execute, to develop and get into production, which was exactly what we did. I mean, we went as a company, Uranium Energy Corp, went from a business plan in 2005 to an initial listing in February 26. And we were producing uranium by late 2010. I mean, it was in 5 years from a business plan to production.
That's
remarkable. It really was, but it was about execution. Mm-hmm. And then when Fukushima happened, I think we all had to really step back and reassess the whole picture. I mean, the speed at which nuclear power generation globally was going to grow clearly was going to change. There was going to be supply surplus. There was going to be all sorts of issues. So now you fast track to sort of, what does it all mean today? There's some interesting metrics today. This year is the first year where global nuclear energy generation is at the same level, if not higher, than pre-Fukushima. It's a fascinating point, because talking about that historical context we were talking about. Last year and this year are the first years post-Fukushima that we will have a supply deficit. That finally, as a result of production cuts and some demand growth, we project to see supply from mining roughly at around 135 million pounds, and demand to be about 195 million pounds. Even if you factor in above ground inventories, secondary supplies, there will still be a supply deficit.
This year.
So this year is key for uranium. We're finally reaching some key fundamental points that signal we've turned a corner after almost 7 years now, or 8 years, since Fukushima happened in 2011. And you're seeing it in the spot uranium price. Last year, the price was up 35%. And you made an interesting point about how even if someone like Mike Oliver that looks at it from a technical point of view, whether you look at it on fundamentals, price action on the commodity, or technicals, it seems like we have a very bullish setup right now for the commodity.
All right, so that's the supply and demand with just a few minutes left, and I know you have a lot of things to talk about. You're producing, you have the ability to turn the switch on almost immediately in Texas, produce upwards to 2 million pounds there. Then you also have in Wyoming another 2 million pound potential, I guess, right? And so what price do you need to see the uranium market go to before you'll turn the switch on and start producing? And then how quickly can you get up to that 4 million pound? That's sort of your limit right now where you could go to in the near future. You also have with your ISR production facilities or potential projects, you could probably ramp up well beyond that over time, I guess, right?
I think just like any mining project or mineral project, we can sit here and talk about mineral upside, exploration upside, and upside to be able to grow the project. Of course, our projects very much have substantial potential. I like to talk about what maybe seems to be more of a defined capacity to produce,
Yes.
whether it's our physical capacity or our permanent capacity. So as you point out, I mean, we have very deep roots in South Texas. Our company's been active in the South Texas uranium belt since inception. And we have our hub and spoke strategy in South Texas, where we have our centralized processing plant with a physical capacity currently of 2 million pounds per year, and multiple spokes as part of the hub and spoke. And the goal in South Texas is to initially get to the full capacity of the plant, so that's 2 million pounds per year. The feed for that would come from 2 or 3 individual mines. But it doesn't mean that our hubs and plants cannot be expanded beyond that 2 million pounds. But that's the initial goal, and the physical capacity is there for that. In Wyoming, our Reno Creek project has a permit for 2 million pounds per year. A very strong recent resource that we announced there of 26 million pounds measured and indicated. And so a project that combined 2 million pounds there with 2 million pounds in Texas. I think our initial goal and objective is to really try to put these building blocks together to pursue a production profile of approximately 4 million pounds per year. That's just the beginning, in my opinion, because these projects all hold potential to be greater than that. And also, not to mention our projects in Arizona, Colorado, and elsewhere, all of which are all either at resource stage or have had preliminary economic assessments completed on them.
So your cost structure with ISR, that's really essentially you pump a solution into, and it comes back out, and then you process that fluid, that liquid, and it's a very environmentally friendly process. It's a very low cost capex and operating cost. Your costs are something around in the $20 some, your cash cost, I think you said?
This is This is really the proof of concept that we actually operated and were in operation at our Palangana mine. So from our actual results, we were able to show over the 3.5 years that we operated just under $22 per pound cash costs. That really is first quartile cost globally. And that's where in situ recovery sits and the global cost curve for uranium mining. The mines in the US, in Kazakhstan, Uzbekistan, these are the places where the right geology exists for in situ recovery. So I think it's a great place to be, Jay, because obviously there's catalysts in play right now this year that could create a real premium for US uranium based on what might happen with Department of Commerce and whatnot with the Section 232. But even if that doesn't happen, when you're first quartile cost globally, I think we have competitive projects in the US, and we're really excited about that.
Right. So I think you also mentioned here at the conference that your cost could actually be a little bit lower if you could process the capacity in the plant, so your overall costs. And but at $45, I think is where you said you'd need to go to turn the switch back on and start producing. So at the low 20s, 45 gives you a nice margin even at that price.
That's correct.
And so anyway, your plans this year, what should we be looking for? I guess it depends on how fast uranium rises, and if we get up to that $45 thing, I guess you probably we'll have a lot more news from you.
This is an exciting year. We have a number of things happening this year, and it's on many fronts. But first and foremost is to really focus on the company's production readiness. So this means developing our Burke Hollow project in South Texas, advancing it by doing the development drilling to define our first production area at that project. This would be our second satellite or spoke as part of the South Texas hub and spoke. Pre-feasibility study is underway for our Reno Creek project. So those two activities sort of are in our U.S. production readiness bucket. Bucket number two is really the fact that our company is the largest shareholder of a privately held company called Uranium Royalty Corp these days. Uranium Royalty Corp is pursuing an IPO in 2019. That'll be an exciting event for us because now we can show the inherent value that we feel this company could have and our holdings there can have. And finally, the catalyst around Section 232 in the US could be quite profound. I mean, if we end up with a favorable outcome for the US industry for uranium, Jay, we could be in a situation where there's a substantial premium for U.S. assets, U.S. production, and U.S. uranium.
Right. And that Section 232, we're out of time, but I know it has to do with the government's concern about the importance of uranium for our security.
It's a national security and energy security issue. That's what the whole investigation is premised around. The U.S. is by far the largest consumer of uranium, both for energy and the U.S. nuclear navy. The nuclear navy plays a really critical role in the ongoing safekeeping of international waters.
Sure.
And these are very critical issues, and these are issues that require U.S. uranium, and U.S. uranium stockpiles are at 20, 30-year lows, because for 20, 30 years we've relied on dismantling a Soviet-era warhead. So these are big themes that are finally really coming to a head, it feels, this year.
Yeah, excellent. Thank you, Amir. It's a great story. I'm going to be watching it very carefully. I'm going to be watching my shares. I'm counting on you.
Thank you.
Thank you so much.